Good morning, everyone. Welcome and thank you for joining us for this webinar by Payroll Plus, Simplifying Payroll Across Mexico. Today, we're going to talk a little about state taxes on payroll, and we're going to focus on the recent changes that have come into effect with the start of the new year, especially the new obligation in certain states for companies that receive personnel services from third parties, mainly outsourcing companies, and this obligation is to withhold and remit to the government the state tax on payroll corresponding to the personnel they are receiving the services from. So I hope this information will be of use and of interest. First of all, I'd like to go over a few general aspects regarding payroll taxes. The first item being the object and subject of the tax. That's to say what the tax applies on and who is to pay that tax. It's important to identify the object of the tax, as some states define it as being the services provided by personnel within the states, or the actual payment that's made to the personnel for the services, whether or not those services are provided in the state in question or in a different state. Some states consider both cases as having to be considered for the tax. It's also important to determine those that are subject to the tax, that's to say those that are obliged to pay it. Up until recently, this tax, being an employer tax exclusively, would be paid by the company that actually makes the payments to the employees. However, with these reforms, we'll see that the direct employer, that's to say the person or entity paying the employees, is not necessarily the one obliged to pay said taxes. So it's interesting and important to determine this in order to ensure correct compliance. The second aspect are the tax rates. These range from 1.8 to 3%. So this is a change from the initial regular 2% rate. These increases have been justified by the states as a need to increase revenue in order to be able to dedicate additional resources to security or education, for example. Regarding items that can be exempt from being included in the taxable base, these depend, they vary dependent on which state is in question, but these can include items such as travel expenses, additional benefits granted to employees such as the savings funds, food coupons, so on and so forth, and can also include benefits for employees with different or reduced abilities. And finally, the tax stimuluses. These also depend on each state, but are usually granted to companies within their first year of operation to help them get started, and can extend up to the third year of operation. And these usually depend on the amount of jobs that the company applying for the stimulus will be creating and the level of salary that will be paid. This makes perfect sense, as the aim of these incentives are to favor employment growth in the states. Continuing with general aspects, in some cases, state legislations require for companies to audit their state taxes. This audit has to be carried out by a public accountant, a certified public accountant, and the cases in which this applies are the states of Mexico City, the state of Mexico, Guerrero, Oaxaca, San Luis Potosí, Veracruz, and Quintana Roo. Some states also oblige companies to file an annual return in addition to the monthly filings and payments that need to be made. These states are Aguascalientes, Chiapas, the state of Mexico, Estado de México, Guanajuato, Guerrero, Oaxaca, and Veracruz. Again, in this case, the annual return is an obligation that's in addition to the monthly filings that the states need to file. In the case of the annual returns, sometimes there can be an amount in favor if the company has overpaid taxes during the year. In that case, the company can request a refund. If there were any omissions or errors in the calculations and an amount is owed, then obviously the company will need to pay that difference also at the time of the filing of the return. How and when each return has to be filed depends, again, here on each state regulation. If you're located in any of the mentioned states and you have doubts regarding the obligations, please feel free to contact us and we'll help review each particular case. Finally, and this is the obligation that we're going to be reviewing in a little more detail today, that of withholding the corresponding state tax on payroll amounts for personnel services provided by third-party companies, namely outsourcing companies. These new regulations are in line with other recent government measures that have been put in place in an effort to really crack down on incompliant outsourcing companies. Obviously, there are numerous very serious and compliant outsourcing companies available to work with, but unfortunately, there are also the ones that avoid paying the taxes that should be paid. So basically what the states are looking to do here is make sure that they're receiving the corresponding taxes on payroll that are to be paid by outsourcing companies that are providing personnel services. And in this case, what they're doing is obliging the recipient of the service to withhold and pay that amount instead of obliging the outsourcing company. So the 4 states that we're going to review today and that have suffered these changes due to the reform of the states of Jalisco, Nuevo León, Nayarit, and Quintana Roo. So we're going to start with the state of Jalisco. So first of all, who does this tax apply to? And this is a state tax in general. So here it applies to all individuals, public and private legal entities, federation, trusts, decentralized organisms, government offices, state-owned entities, and autonomous public organisms. Obviously, if they hire or if they have direct personnel that they pay payroll to, any of these would have to pay the corresponding state tax. The base for the tax in Jalisco is on the total of expenses paid as consideration for subordinate personnel services. The rate here is 2% state tax on that base, and payment must be done no later than the 12th of the following month on which the tax was generated. So, for example, taxes for January would need to be paid no later than February 12th. In this case, February is a good example because the 12th is on a Sunday. So in this case, the deadline would be pushed to Monday 13th, because if the 12th is on a weekend or bank holiday, then the deadline is the following business day. So what's the new obligation that comes into effect as of January 1st, 2017, due to the reform to the Jalisco Revenue Act? All services that are provided by third-party companies, the corresponding tax for the state tax on payroll will need to be withheld from the person or company entity receiving that tax, and they will need to remit it to the government within the same deadline as, let's call it, the regular state tax on payroll, the state tax that you would pay for your direct employees. So that's to say the 12th of the month that follows the taxes being caused. It's very important to mention as well that this obligation also applies to third-party construction workers. that are providing services for a building located in Jalisco, even if the company receiving the service is located outside of the state. So if you're a company in, say, Mexico City, and you buy a building in Jalisco and work is going to be done on that building, then you will need to withhold and pay the corresponding state taxes in Jalisco. Again, even if your tax address and all your registrations are in Mexico City in this example. So what are the obligations for the recipient of the services? First of all, they need to register with the state tax authorities as a withholder of the tax. So if you're a person or company that is already registered with the state because you also have direct employees, you're going to need to file an additional registration for this particular new obligation of withholding. So you would have two separate registrations, one for your regular state tax payments on your direct employees, and one for the amounts that you're going to be withholding from the third-party personnel supplier. So you're going to have to withhold and remit the taxes generated by the service provider to the government, as mentioned. So how is that withholding going to take place? The service provider is going to have to provide you with the detail of the payroll that's been paid to the employees that are providing the services to you or your company. And they're going to need to include that in the invoice so that you know how much you're going to be withholding and how much needs to be remitted to the government. Once the amount has been withheld and remitted, the government will provide a withholding receipt, and that receipt needs to be delivered or given to the service provider so that they can use that as proof that the tax has been paid. Regarding the obligations for the service provider, as mentioned, they have to inform the entity or person receiving the services of the payroll amount and corresponding taxes. If they don't do that, then the law states that the recipient of the services have to calculate the tax to be withheld, and in this case, the base to calculate the tax is going to be 90% of the value of the invoice that they issue to you for the services. So we come to the first issue here because it's not clear if the 90% is on the total value of the invoice including VAT or excluding VAT. So that's the first question that needs to be looked into and clarified, because that to date is not clear. And so considering this, it's very important that the service provider do include the detail in the invoice, because otherwise you're going to be determining the tax on a base that's a lot higher than the actual base, because the invoice doesn't just include the payroll concepts that are part of the base, they also include expenses, social security charges, and the supplier's markup on the services. So obviously you're going to end up withholding a tax that's a lot higher than it should be. And it's also important to mention here joint liability. So what the government is making sure of is that no matter what, they're going to have the taxes paid, because if the outsourcing company doesn't do it, it's obliging here the company receiving the services to pay that tax. In fact, actually, they're obliging the company receiving the services to pay the tax. So they're making sure that they're receiving their money. What happens if these regulations are not complied with? Obviously, the government has put in place determined fines and sanctions. These fines are measured or determined based on units of measurements and updates. For those who may not know, one of the other changes that came into effect this year is the switch from calculating fines and sanctions based on minimum wages, and now nothing is to be calculated based on minimum wages, but on units of measurements and updates, which is around, I think, 75 pesos per unit for this year. So failing to register before the state registry will mean a fine of 15 to 100 units of measurement, which translated to pesos is around 1,130 to 7,550 pesos. Failure to comply with the obligation of withholding and paying the corresponding taxes will result in a fine ranging from 50 to 100 units of measurement, which goes from 3,775 to 7,550 pesos for each emitted period. And the same fine applies if you withhold but fail to pay. If the taxes are not paid, including those withheld, and this is discovered by the authority, there will also be a fine that can range from 55 to 75% of the emitted contribution. And if this reoccurs, then the fine can increase by 20 to 30%. So looking at the registration requirement a little more in detail, the documents that are necessary to register before the corresponding authorities are the same as the ones that you would normally have to provide. So the company's articles of incorporation, their registration with the tax authorities, proof of address, identification for the legal representative, etc. And in addition to those, the company will have to fill in the form that has been specially designed for this effect. And in that form, select the option payroll tax withholder so that the government knows that you're registering for that particular obligation. The government will also ask you to provide the service contract that you have with the third-party supplier. So obviously, if you have 5 third-party suppliers for personnel services, then you're going to need to provide the 5 contracts and provide any new contracts that are added along the way. And the government will also ask you to provide proof that the outsourcing company that you're dealing with is registered before the Social Security so that they can make sure that they're paying their corresponding Social Security contributions. This process has to be carried out directly at the tax authority offices, the state tax authority offices. We try to make payments as well through their website for the withholding concept, and we weren't able to do it. We contacted the state authorities, and they mentioned that the website doesn't have the functionality to be able to do the registration and the payments online. So those would have to be done all to date at this time directly at the tax authority offices. So that covers the state of Jalisco. Moving on to the state of Nuevo León. So the base for the tax is basically the same. It needs to be paid on all expenses that are paid as consideration for subordinate personnel work within the state. And the subjects of these taxes are individuals, legal entities, or economic units, governments on all 3 levels, federal, state, and municipal, trust, decentralized organisms, and public entities. The tax base is, again, all the expenses paid as consideration for subordinate personnel work, obviously excluding any exempt items that the state will allow you to not consider in the base. In the case of Nuevo León, contrary to Jalisco, the rate is 3% on the taxable base, and payment needs to be made no later than the 17th of the month following the month that the tax was closed on. So in this case, there's no the deadline isn't pushed back because the 17th is a Friday. But it would be the same as Jalisco. The 17th is on a bank holiday or weekend. Then the deadline goes to the following business day. And as is the case in Jalisco, in Nuevo León, the Revenue Act was amended to include the obligation of withholding the state tax that corresponds on payroll wages paid to personnel that provide a company services through an outsourcing company. Again, here, the companies that are in this case, so that receive services from personnel services from a third party, will have to register with the state as a tax withholder. In this case, if you already have a state tax registration to pay the state tax on your direct employees, on the wages that you pay to your direct employees, this new obligation is added to the existing registration, so no need to file an additional one. Determining the tax here, again, it's important that the service provider includes the amount that corresponds specifically to the wages that are paid to the personnel in question, so that we know what the taxable base is exactly, and so that the tax is correctly considered and withheld. In this case, if the service provider doesn't provide that detail, the law for Nuevo León is slightly different from Jalisco, as they indicate that the withholder will have to calculate the taxable base or the tax based on the total value of the invoice. In this case, they do specify that it would be the total excluding VAT. And so obviously in this case, again, it's highly recommendable for the outsourcing company to provide that information to their client so that the client isn't determining a tax on a higher base that would include the Social Security charges, expenses, markup, etc. Once the tax has been withheld, determined and withheld, it needs to be remitted to the government. In this case, the law doesn't clearly specify when the remittance needs to be made to the government for these withheld taxes. We only know that the taxes that need to be paid on the wages for a company or a person's direct employees need to be paid, as mentioned previously, on the 17th of each month. But based on the analysis that our team has carried out and the information that we've obtained from the government offices, it seems that the taxes withheld have to be remitted to the government within the first 15 days of the following month. So you have to determine, withhold, and remit the taxes that you're withholding by the 15th, sorry. And your taxes, your state tax on payroll for your direct employees would need to be determined and remitted by the 17th of each month. Once you've remitted the amount withheld to the authorities are going to provide you with a proof of withholding. In this case as well, this proof of withholding needs to be provided to the service supplier so that they have proof that the tax has been paid, and they will be able to credit that amount to their taxes. So that would be that fourth step here in the obligation of the service recipient, the obligation to submit the proof of tax withholding to their service provider. Regarding the obligations that the service provider has, the fact that their client is withholding and remitting part of their state tax on payroll doesn't exempt them from also filing their monthly return. So they would need to do that anyway on the total amount they've paid to the employees that are in their payroll for the outsourcing company. But what they'll be able to do here is credit the tax withheld. If there was too much tax withheld, they will be able to request a refund for the difference, or if there's still an amount remaining to be paid to the government, then they'll have to remit that amount themselves. And again here, there's the aspect of joint liability, as there is in Jalisco. The state's making sure that no matter what, they'll get their payment. Again, here the government has put in place fines for failure to comply with these new regulations. Failure to submit registration as a withholder with the state would lead to a fine of 8.5 units of measurement, which amounts to approximately 640 pesos. Failure to pay contributions, included those withheld, and if discovered by the authorities, there'll be a fine of 75 to 100% of the omitted contribution. And omitting to pay the contributions will be treated as tax evasion, and as such will be sanctioned as such. In the case of Nuevo León, the requirements for registration to register as a withholder seems to be a little simpler than in Jalisco, because they do have a portal through their website, Tesorería Virtual, which is literally translated to virtual treasury, that allows you to do the registration online. Company needs to go online, or person needs to go online, enter all the general data that's requested, and once the registration is completed, then you'll receive a state account number that you'll use to file the corresponding returns, here again through the virtual portal. So it seems that there wouldn't be any need to go to the authorities' offices in person. Moving on to the state of Nayarit. Nayarit is slightly different from the other states. The base for the tax is the same, basically. So it applies to wages paid to personnel providing subordinate work derived from a labor relation. Here in this case, and this is where it differs a bit from the other two states that we've just reviewed, the subject of the tax here only mentions individuals and legal entities. It doesn't mention anything regarding government bodies. The tax is based on the total expenses paid as consideration for subordinate personnel work, again excluding the authorized exempt concepts. The rate is 2% on the taxable base, and in this case payment needs to be done within the first 10 calendar days of the month following that when the tax was generated. In this case, again, the company or the person receiving the services from the outsourcing company will need to determine the tax, again, based on the amounts that are paid for payroll to the employees. They will need to withhold and pay the tax and provide a withholding receipt. One of the other major differences with other states is that in Nayarit, the paragraph that's added by the reform and that defines the obligation only considers the services that are provided by another taxpayer that's located in another state. So only for those service suppliers that are out of state does the tax need to be withheld and remitted, whereas in the other case, it's all service providers of personnel services, no matter where they are. And in this case, again, fines apply for not complying. In this case, it can go from 1 to 2 times the omitted amount. And the final state that we're going to be reviewing in detail today is the state of Quintana Roo. This is the 4th state that has these changes to their Revenue Act, and that implies the obligation to withhold the state taxes. State tax applies. The law of Quintana Roo also specifies, and this is slightly different from the other state, that the base of the state tax payments made to personnel also apply for those that are assimilated to wages, so like independent contractors, commissioners, as well as advances that are paid to members of the entities. Obviously, again, here considering all the exempt concepts. And the subjects of the taxes here are individuals, legal entities, or economic units, the same as the other states. And the state of Quintana Roo also mentions the government trusts and decentralized organisms, so in line with Jalisco and Nuevo León, but slightly different as we've seen from Nayarit. So the base for the tax is the total expenses paid as consideration for subordinate personnel work. The rate is 3% on the taxable base, and the payment needs to be made, as in Nuevo León, no later than the 17th of the following month, again applying the rule that if it's a weekend or a bank holiday, then the deadline is pushed to the following business day. And again, as is the case for the other states, the person or legal entity receiving the service will have to determine the tax. They'll also have to notify the government of the obligation to withhold, and they'll also need to notify the government of all the service suppliers that provide them personnel services. And in this case, they'll need to provide general information regarding the service provider, such as their name, their tax ID, their tax address, the number of employees that are going to be working for the client, so in this case the company that's filing the notification, and the amount of the payroll that represents, as well as the reasons for which the client is requesting these services. So they will have to withhold and pay the corresponding taxes. This obligation can be filed through the state authority's website electronically. So again, it seems that here there's no need to go to the offices personally, and they'll need to submit the proof of registration. This can be done in person by going to the state offices. In this case, the base for the tax to be withheld to be determined also needs to be on the amount of the corresponding payrolls. But there are no other obligations really for the service provider. Here the obligation is really for the person receiving or the company receiving the service to determine and withhold the tax. And again here we have corresponding fines for failure to pay partially or in full the amount of contributions that are withheld from the service providers. In this case, the law in Quintana Roo mentions the measurements in minimum wages, but as I mentioned at the beginning of the presentation, that unit of measurement for fines no longer applies. So even if it does specify minimum wages, the fines would apply considering the UMAs, the units of measurement and updates. And in this case, the fines are quite a bit higher than the other states, as they go from 100 to 300 times the UMA, so that translates to 7,550 roughly, to approximately 22,640 pesos. So that covers the 4 states that have seen major changes in their state tax legislation as far as state tax on payroll goes. If you're in any of these states and you have any additional questions, we will have time at the end of the presentation to go over them. If we don't have time to go over all the questions, we'll make sure to respond to everyone via email as soon as we can. So having gone over these 4 states, I'd like to mention a few other general aspects or changes to state taxes that we believe are important to mention and hopefully will be of use to you. So first of all, the rate increases. As I mentioned at the beginning, the standard rate used to be, or the normal rate used to be 2%, but these have been increasing in certain states. One of the states that's increased their rates is the state of Sinaloa. They increased the percentage for it to apply based, or to be variable, based on the amount of the taxable base. So it used to be 1.5% regardless of what the amount of the tax base was, and now the rate can vary from 2.4% to 3%, depending on the amount of the taxable base. Another state that has increased its rate is Tamaulipas, which increased its rate from 2 to 3%. Tlaxcala also increased their rate by 1%, making it 3% instead of 2%. And Zacatecas increased their rate from 2 to 2.5%. So if you're in any of these states, please make sure that you're calculating your new tax or your state tax on payroll based on the new rate. If you're already a client of the company, don't worry, Payroll Plus will be monitoring those changes, and we'll make sure that all the calculations are done based on the new rates. Other changes are in the exempt concepts, so the items that you can omit from including in your taxable base. The main state that has changed their regulations regarding this is Zacatecas. So now concepts such as profit sharing, pensions, terminations, funeral expenses, travel expenses, punctuality bonuses or assistance bonuses, attendance bonuses, as well as overtime, for example, could no longer be considered as exempt for the taxable base. Tax benefits, which we talked a little bit about as well at the beginning of the presentation, mainly tax benefits that are granted to company for 2% or for state tax on payroll are granted for the companies that employ people with different or reduced abilities and employees that are over 60. The other benefits are the exemption of paying state tax if granted by the government. That's the case for Jalisco. So if you are within the conditions that the state determines to be able to apply for the benefit and be granted the benefit, then your first year of operation you can be exempt from paying 100% of your state tax on payroll, and that can be extended to the second year, where you can benefit from a 50% discount on your taxes. Sonora is another state that has more or less the same benefit as Jalisco, to benefit from being exempt the first year of operation from paying state taxes. And finally, well, the item that we've been discussing in detail is the obligations that states have to withhold taxes. This is an obligation that in certain ways already applied in some states. If the states that you're in haven't been mentioned and you have doubts, again, please feel free to contact us, and we'll be more than happy to help analyze each case, case by case. And so, well, the conclusion to all of this is, again, as I mentioned at the beginning of the presentation, the aim is for the states to ensure that they're collecting the taxes that outsourcing companies have to pay for the employees that they provide to their clients, and make sure that that the state is receiving all the taxes that they are owed. So that's it for me on the presentation. We have some time for questions. So if anybody has any questions, please feel free to write them to us through the system. Okay, so one question that we have is, well, really a question regarding recommendations to make sure that companies are compliant with this new obligation. As I mentioned, the aim of all of this is to make sure that all the outsourcing companies are regular with their tax payments, and all the regulations that the government is putting in place is tending towards companies hiring all their employees directly and avoiding the use of outsourcing companies completely. But for companies that still wish to have personnel provided by third-party suppliers, then the recommendation is to make sure that obviously you're choosing a compliant outsourcing company that will provide you the information, and obviously having a very good communication and coordination with your supplier to make sure that they're including all the information in their invoices, so that you're able to withhold and remit correctly the corresponding taxes. Again, here, if any of you are already clients of Payroll Plus, that's something that we will obviously be helping with and be monitoring very carefully. This is obviously going to entail larger or greater administrative work, because we're going to have to be monitoring very closely all outsourcing activity for our clients. But again, the recommendation, if you are going to have employees from an outsourcing company, is to make sure you have good control and coordination and communication with your supplier. Which actually reminds me, and this isn't a question that's been submitted, but talking about including the detail in the invoices, you will also need to, if you're an outsourcing company, you will need to contact your invoice supplier so that they can help you configure your system to be able to include that concept in your invoices, as the programs right now don't include that option. Another question we have here is, does the obligation to withhold the corresponding taxes apply to services provided by cleaning companies? In our opinion, it does. The legislations don't don't specify what third-party supplier services are, talking about personnel. So considering that this is personnel from a third party that's coming to your location, to your facilities to provide services, we do consider that those the payroll paid for those people need to be considered in the withholding amounts. And here again, it's very important that the company providing the cleaning services give their client the detail of how much the payroll is, because their invoice obviously includes here the equipment that's being used to clean, the cleaning products. So if they don't provide the amount, then again you're determining the taxable base on a larger amount. Another question is, when does the proof of withholding have to be provided? In the case of Jalisco, there is no specific date, so we recommend to issue that as soon as the taxes or the remittance of the withheld taxes are paid. In Nuevo León, it would be 15 days after, within the 15 days of the period that the taxes are caused. Okay, another question is, does the obligation apply to insourcing companies? In this case, we would recommend that you review the item with your lawyers, because they will have set up a determined structure for those kinds of operation. So it's very important to check that with them to determine, in this case, what needs to be done. Strictly speaking, the obligation would probably apply, but again, it's very important you check with your lawyers to make sure that the registrant as a withholder doesn't affect the structure that's been set up for the insourcing structure. Okay, another question is, once the contract with the service provider is terminated, do I need to cancel the registration as a withholder? You need to notify the authorities of any changes to the contracts, new contracts being added, or contracts being terminated. If that contract is the only one and you are not planning on having any other employees provided by a third party, then yes, you would need to notify the government that the contract has been terminated and that you will no longer be obliged to withhold. If you are planning on hiring services from another company, then the recommendation would be to not cancel the registrations to avoid having to re-register afterwards. But if you don't cancel it, it's very important to mention that you will need to continue filing the monthly returns just as informative, so in zero, because you'll have nothing withheld. But you do need to continue informing the government on a monthly basis to ensure you're still compliant. Another question would be, could there be double payments? This relates a bit to the question on the recommendations to ensure that you are compliant. Yes, there could be double payments if the outsourcing company is considering the amounts that are being withheld in their own payments, and you're also paying the amounts that you're withheld. Here, if there are overpayments, then the entity that's going to need to deal with the refund or offset process is the outsourcing company. So again, here communication between the company receiving the services and the company providing the services is extremely important, again, to avoid any double payments. Okay, So someone is asking, if I'm already registered with the state authorities, state tax authorities, and I have some contract employees, do I have to register again? So yes, this is what we were mentioning. If you as a company have direct employees, so for example, all your administrative personnel you hire directly, so you're registered with the state tax authorities to determine and pay the taxes that you yourself have to pay for your direct employees. But you also have, say, subcontracted personnel through an outsourcing company or through a third-party company for your cleaning, your security, maybe maintenance on the building, then you'll need to also register as a withholder in those cases. The question is, does the legal representative have to do the registration in person? In the case of Nuevo León, as we saw, the registration seems to be able to be done online. In the case of Jalisco, where it has to be done in person, as is the case when you're registering for your regular state taxes, the legal representative can provide a letter to any other person that can to be able to do the registration on their behalf. The letter has to be signed by a certain number of witnesses, and that person will have to take with them a certain number of information and documentation regarding the legal representative in order to be able to file the registration as a withholder. Okay, so another question. As of when does this apply? This applies as of January 1st, 2017. Continue with that question is, have any of the governments issued notices informing us that, that there will be additional time for companies to be able to comply with the registration requirements and the withholding payments? To date, none of the governments, to our knowledge, have issued any information regarding possible extensions. But we do hope that, or we do expect them to do so. As the time frame that's been given to be able to comply with everything and analyze each case is rather short. So again, we do hope that communication by the governments will be published to that aspects. Okay, another question. Does the withholding need to be included in the outsourcing invoice? So as we've been discussing throughout the session, it's not exactly clear whether it needs to be or not, or if that's where it should be, but it makes sense that it is included in the invoice, because there's nowhere else really where they would be able to detail and include the taxable base. So the recommendation, or how we see things working, is that yes, the amounts would need to be included in the invoices, so that the payment actually corresponds to the invoice. Okay, I think that covers all the questions. Again, if there were any other questions that that you had and that we didn't have time to respond, we'll respond via email. If any other questions come up once we finish the session and you'd like to contact us to be able to ask us those questions, here the contact information for my colleague Aide, who will be in charge of following up on anything and responding to you. So please do feel free to send any questions that you may not have thought of straight away to her. And so, well, on behalf of myself and Payroll Plus, simplifying payroll across Mexico, I'd like to thank you once again for joining us today. I hope this has been of interest and will help with your operation, and have a wonderful weekend.